Hello, everyone. My name is Zulfiqar, and welcome to another episode of Income Investors. With me today is John Whitefoot with another exciting income pick. If you want to read more about what John writes on a regular basis, you could head to incomeinvestors.com. You can find the link to the website in the description below. Companies will often pursue mergers and acquisition to drive growth. The strategy entails lots of capital, but if done correctly, the end results could be game-changing. And that's the case with oil and natural gas producer Civitas Resources Inc., traded on New York Stock Exchange under symbol CIVI, a $6.7 billion market cap company that revamped its entire energy business following a major merger. John?
Yeah, thanks, Mo. Yeah, Civitas Resources is a byproduct, actually, of a significant $4.5 billion merger that brought together 3 of the top 10 oil producers in Colorado in November of 2021. The merger included 2 publicly traded companies, Bonanza Creek Energy and Extraction Oil and Gas, plus the privately held company Crestone Peak Resources. But if the initial merger wasn't big enough, in June 2023, Civitas Resources announced it would be acquiring the Permian basin oil and gas operations held by private equity firm NGP Energy Capital Management, LLC, in a $4.7 billion deal. That deal expands Civitas Resources operations into the high prospect shale region and is expected to significantly ramp up the company's revenues.
And I assume this give a CIVI stock a big boost?
Well, you'd think so, but despite Civitas Resources' 2 mega deals, the company's stock has struggled. As of this recording, CIVI stock is up just 1.3% in 2024 and actually down 6.5% over the last 3 months. It's also down 21% below its 52-week high of $86.58 per share and just above its 52-week low of $60.38 per share. Now, at this level, I see the stock as a long-term opportunity for income investors who also want price appreciation potential.
Have the mergers and acquisitions helped power in revenue?
Yeah, well, Civitas Resources revenue prior to its initial merger were pretty insignificant, hitting $218 million in 2020. Now, the company's revenue surged to $930.6 million the following year in 2021 and exploded by 307% to $3.8 billion in 2022. Now that revenue growth is expected to continue. Analysts estimate that Civitas Resources will report revenue growth of 58.1% to $5.5 billion in 2024 and growth of 4.4% in 2025 to $5.74 billion.
How are the profits looking here?
Well, on the bottom line, the initial merger powered a significant increase in profits, $3.24 per diluted share in 2019 to a whopping $14.58 per share in 2022. The company's diluted earnings per share declined in 2023, despite the company's major acquisition that year, but much of that decline was due to the cost of that acquisition. Now, adjusting for non-recurring expenses, Civitas Resources reported adjusted earnings of $9.44 per diluted share in 2023. Now, that is expected to rise to $12.38 per share in 2024, and again climb to $14.30 per share in 2025.
And what's happening with free cash flow? I know free cash flow is important because it supports dividends.
Yeah, Civitas Resources has been largely free cash flow positive. The initial merger boosting its free cash flow from a pre-merger loss of $32.3 million in 2019 to $1.1 billion in 2022. But just like its profitability, the company's free cash flow fell in 2023, but that was due to its acquisition and capital expenditures. Now, Civitas Resources stock's high free cash flow will continue to support its steady dividend and allow it to raise those dividends. It paid a dividend for the last 4 years and raised it for the last 3 years. It last paid a quarterly dividend of 50 cents per share, or $6 per share on an annual basis for a current yield of 8.63%. Now, given the higher expected revenue earnings, it seems pretty logical that the company's free cash flow will remain strong, which should allow it to increase its dividends.
John, thank you so much for your insight. Civitas Resources appears to have built a solid oil and gas business following its mergers and acquisitions. The company now has to put things together and drive organic growth. For income investors, Civitas stock offers an attractive dividend yield and good share price appreciation potential. CIVI stock has become a favorite of institutional investor crowd as well, with 501 institutions holding 84.1% of the outstanding shares. The Canada Pension Plan Investment Board is the top institutional investor with a 16.47% stake. That's it for today, and make sure to go to incomeinvestors.com now to get our free special report on 3 income stocks to own today. One of those stocks currently has a dividend yield of 12.7%. You can find the link to incomeinvestors.com in the description below. We'll be back with more income picks soon, so stay tuned, and in the meantime, don't forget to like this video and subscribe to our channel. Goodbye for now.